Friends, welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. Thanks a lot for joining today's webinar. Friends, today's, as you know, that we have started now masterclass as we are doing regularly. We have done masterclass on LODR, masterclass on RPT, masterclass on Companies Act, and masterclass on RPT and various other topics. So we thought that why not now sector specific, because CS are not limited only to the Companies Act. They are compliance head and they are helping the companies for compliances. This is the most preferred professional for the compliance function. Then why not we start and work on the different sector specific compliance? And that's why the idea of masterclass on NBFC compliance. And this is masterclass on NBFC part 2. Sorry, when it started last week, I was not there. I was out of Mumbai and net connectivity was not there, so I was not there. So today I'm there. Today's topic is an insight into Fair Practice Code and Internal Ombudsman. Now, our panelist is Mr. Jay. Mr. Jay, thanks for your time. And to formally introduce Mr. Jay Kishan, I'm telling you Jay, short form. Mr. Jay Kishan Premani is a company secretary of Finova Capital and a compliance professional with a history of working in banking and finance services industry. He has over 10 years experience in fundraising, private equity, IPO, DD, ESOP management, RBI compliance, inspection, SEBI LODR, secretarial compliance, and prior to Finova, he was with Finova Capital. He was associated with Avas Financials Limited. Welcome, Jay. Thanks for your time. Thank you. I'm sure our participants will benefit from your experience.
Thank you, ma'am.
Our today's another panelist is Mr. Hemant Pandya. Mr. Hemant Pandya has around 18 years of rich experience across the spectrum of corporate secretarial compliance legal functions. His career began in 2007 with JM Group, and he is currently designated as Executive Director, Compliance, Legal and Corporate Secretarial. In 2010, he joined Mehta and Mehta, so he's a proud ex-Mehta, our family member. As a partner, again, here he served various clients. He holds BCom degree, law degree, and qualified CS and fellow member FCS of ICSI. He serves as at present company secretary and compliance officer of JM Financial Limited, the flagship company of JM Financial Group. Also, he oversees compliance and secretarial functions of various subsidiaries in the group, which includes NBFC and Housing Finance Company. In his leisure time, Mr. Pandya enjoys reading, drawing, sketching, as well as writing articles, poetries. He has been active contributor to ICSI, conducted various programs, training sessions, and to share knowledge with students and fellow professionals. Of course, our other panelist, Mr. Bala, I am not introducing you. He is our veteran, so it's always there. Thanks. And today's presenter is Ms. Ria Sidwani. And she is going to present. Thanks, Ria. And with this short introduction, I thank all panelists for today's webinar for joining us on our knowledge sharing journey on behalf of entire team of Mehta and Mehta. I'll request Mr. Jay to say a few words on today's topic, then Mr. Hemant, and then Mr. Bala, and then Ria, you can start the presentation. Over to Mr. Jay, please.
Yeah. Thank you, ma'am, for the generous introduction. And hi, good morning to all the participants. So this session would be about now Fair Practice Code, which has been the much sad topic when it comes to at least if we talk about 1 or 2 years earlier, then there is just a small a guideline about fair practice code, and NBFC has left, sorry, RBI has left to the NBFCs to decide about how they want to function the fair practice code. But you have to understand the chronology. So just setting the tone, I think that you must remember that when SBR came, then they came a guideline about disclosure of financial statement, top 5 grounds of complaint. So in the first year, they observe that what kind of complaints is getting from the NBFCs, and now they are just focusing on those areas where the NBFC have generally, has kind of deficiencies, and complaints are majorly coming from those areas. So they are just focusing on those areas when you are disclosing the complaints. Now, when it comes to the dispatch of the property documents after the loan closure, they have now come with the specified guidelines. When it comes to the capitalization of the penal charges, so they're slightly coming on to those areas which you have disclosed as a complaints. So this is their intent basically. So it has now become very, very important. And recently they also came with a circular on how the payments is equal to disbursement, which is very important. And the intent of the regulator is very, very clear about some of the NBFCs have done it, but some of the NBFCs have still not done it. So their intent is very, very clear when they come for inspection, and that the payment should be the key when you charge an interest from the customers, and it should be realized into their account. So they are very, very clear about this. So they are touching all the topics, and the things has not stopped yet, and they will, of course, they will also come on a different things in future. So let's I think that Ria will carry forward the presentation, and we will discuss more on this. Thank you.
Thank you, Jay. Hemant, please.
Yes. Good morning, everyone. As you know, very nicely, conveyed background of FPC. So I don't want to add much, but few things which I want to tell about FPC. FPC, if you say, is the backbone of the responsible lending institute, like in NBFC sector. It was somewhere introduced in 2006 formally. It was introduced by RBI to ensure what do you say that NBFC maintains 3-4 things, that is transparency, fairness, um, ethical conduct of business, accountability, and customer empowerment. For RBI, customers are the king. For NBFCs, especially in the MSME and lending space, wholesale lending, what happens is people know each other. So there is no much dispute. But dispute mostly happens when there are retail customers, there are SME customers. Then FPC is not just a compliance checklist, for NBFC. When we are working, it's not just a compliance checklist. It is a tool to build long-term trust with borrowers, with regulators also, and strengthen governance. So if your NBFC is getting a lot of complaints in from the retail customers, RBI may not take it good. But if you don't get very less complaints, when they come for inspection, when they see your policies, they are really happy to see that you are. That is the way they see that you are doing it generally doing your business very fairly. So for NBFC, this is the most critical, what we say, a pinpoint thing, for the compliance officer to do the work. And NBFCs are mandated to disclose long important terms upfront. You cannot hide. That is what FPC says. You have to be very transparent when you're dealing with customers. And RBI have come up told that your agreement should have things in vernacular language, so that it should not happen that customers say, I didn't understand, I don't understand English. So everything should be in vernacular language. Then you cannot have you should have robust grievance redressal mechanism when a complaint comes, how to deal with complaints. So exhausted guidelines are given. You have to appoint an internal ombudsman, how internal ombudsman will treat the complaint. Everything is done very this thing. And RBI has clearly said that FPC is a fiduciary responsibility of the board and management. So it's not only compliance officer, but the RBI will say if something goes wrong, for them they will catch hold of board also. So as panelists, I believe our discussion should will focus on NBFCs and the FPC principles in day-to-day business. Today we will be trying to cover a lot of things, and thereby ensuring that everyone may get a gist of what FPC is in the NBFC domain. Thank you, ma'am.
Thank you. Thank you. Yeah, Mr. Bala, a crisp your thought.
Good morning to all of you. Both the panelists has very nicely put about the fair practices, what is being introduced by the RBI. In fact, in summary, the only thing which actually comes to my mind is the primary reason for this circular is basically to safeguard totally the customers from the unfair trade practices which has been actually prevalent in the financial sector. That is the whole idea. Many of the old timer may be knowing, even today, if we take an insurance policy, they tell so many things. But what is written in the fine print, it is not read. It cannot be read also. The whole idea of printing itself is you should not read it. But when we actually go for the settling the claim, then we will say this is the condition, this is the thing, did you not read this, this is the thing, that is the thing, all the things are all happening. So that means what? It is all emanating what you call mis-selling of the financial products. That is the first and foremost thing. That is why the transparency aspect has come. Second thing is again the breach of the customer information and the confidentiality many times. Because one thing, as he rightly put the agreement, etc., everything is to be disclosed, everything should be known, etc. Those things which actually has come. And not only that, what happens suddenly you will find certain amounts are charged in your account, charging exorbitant interest rates without intimating to you, without telling you, without assigning any reason, etc. These are also happening it. Not only that, especially when it's come to the vehicle loan and other things and all, even the property and all those cases, harassment is created by the recovery agents upon the customers. So this has been prevalent for a long time. So RBI thought we should set rights, we should safeguard the interest. So because of that, the Fair Prices Code, which has actually come, basically it is talking about borrower interest, borrower protection for the first instances, then transparency, fairness, as our panelist has put it, and above all, promoting the good governance practices with the ethical way of doing the business. That is what it is there. Of course, accountability goes with the board of directors. Even the guidelines talk what are the responsibilities, what is the thing, etc., and other things and all, which is also there. As we go along, we will see that. And I can also see last time there was a very good response. There was a very good interaction because Hemant was there. Hemant is not new to our platform. He was there earlier. Last session also he was there. We have last time over 275 plus people. Lot of interactions were there. So today also we expect things will be there. As he rightly say, we will be touching upon the fair practices code relating to the NBFC and plus the internal ombudsman, how to resolve the grievances of the customers, how to go about the mechanism, etc. That's all. Over to.
Thank you. Ms. Ria, you can start the presentation. Thanks a lot.
Sure.
Friends, as usual, put the your questions in chat box, but please be relevant to the today's topic. Don't put questions of different nature. Try to avoid that. Thanks a lot.
One more thing is there when Dipti says that please do not put any case specific which are there. We will not be able to answer those sort of thing. We are only going through the regulation, interpreting the law and talking in general. So don't use this platform as seeking a personalized sort of the question because we will not be able to take up those questions unless we know the full details. Yeah.
Yeah. Thanks.
Good morning, everyone. Today is our second session on the masterclass of NBFC series. In the previous session, we had discussed about the introductions about the NBFCs and the layers of the NBFCs that are given in the scale-based regulation, including the governance norms given under the said regulations. So in today's session, we will be covering the fair practice code that is given and the basic guidelines given in the scale-based regulations issued by the RBI. And we'll also cover, since Internal Ombudsman is part of a fair practice code, so we will also be covering master directions on the Internal Ombudsman issued by the RBI. So basically, a fair practice code is a document that outlines the procedures of NBFCs to ensure clarity, transparency, and timeliness in its dealing with the customers while lending. So basically, a fair practice code was introduced to set basic standards and ensure that necessary disclosures are given to the customers while dealing with them and providing them the loans or the lendings. So basically, it's a code of conduct that promotes fair and equitable treatments to the borrowers. So, basically, these fair practice code are applicable to all types of NBFCs, be it base layer, middle layer, or upper layer. Only the requirement is that the NBFCs which have a customer interface, they are like mandatorily are required to have a fair practice code. So, the first and the foremost guidelines that is given for given which needs to be included in the fair practice code is regarding the applications of loan and the process that will be followed by the NBFCs while providing those loans. So basically, all the communication, the basic fundamental of fair practice code is to ensure there is a the customers are or the borrowers are understand what they are dealing into entering into. So to ensure that it's a mandatory that all the communication the application loan applications, loan agreements are to be given in the language that is understood by the borrower. So, secondly, all the loan applications forms, should be in the language they understand, and all the necessary information which will affect, which will help the borrower or the customers to take an informed decision are communicated to them, which will affect their borrower's interest. So this will ensure helps them to take a to give a comparison with the other NBFCs also. And necessary supporting document list is also to be provided in the loan application forms. Then the NBFCs are required to have a proper systems in place for while granting the loans and the acknowledgements that will be shared by the customer by the NBFCs to the customers, and it should have a time frame within which those processes and acknowledgements will be given to the NBFC to the borrowers. So, loan appraisal and terms and conditions. The NBFCs are required to have a communications to the borrowers while they are sanctioning the loans and the loan amounts, and all the terms and conditions should include an analyzed interest rate, including how those interest rates are calculated and the methods for that. So, NBFCs are required to give, loan agreements to the borrowers, and those loan agreements should be in the format or the language that is understood by the borrowers. Even all the enclosures that are to be given with those loan agreements should have, should be in the language that is understood by the borrower. And in case though the loan agreements or the annexures are not given to the customers, or the failure to provide those agreements, then it's considered as a unfair practice. So the next important thing that was recently introduced in the last year regarding it was key fact statements that are to be given to the customers while sanctioning the loan agreements. So what are key fact statements? Key fact statements are basically a summarized format in which the basic or the key aspects of the loan agreement, key aspects of the loans are given in the key fact statements. And it should also include the annual percentage rates and the amortization schedules that are to be entered for those particular loan agreements. And the contents of
Hemant, somebody is actually putting a question here regarding the loan agreement. They say the loan agreement are actually sent via SMS or email or by the legal mode of hard copy or is it required? The hard copy is required. That is number one. Number two, he says the customer may not open the email or you may not open the link which is actually sent, etc. and other thing and all in the agreement. So what is this on this matter? Could you please kind?
So there are two things, one is if you're doing a lending through digital lending, okay, then you don't have to send through email. I mean, the agreement and everything will go through email, but there is a way where, while sanctioning the loan and everything, the agreement is also shown on the screen. And then, there's a confirmation which says, I have read, I have understood. And then, there is an OTP which comes to the client and then he confirms. So that is how digital lending happens. And when you are sanctioning physically, a physical copy is given. Additionally, you may give a loan agreement or anything, by email, that's fine. But it all depends, the type of the lending that you're doing. So just sending, through email will not work. So you'll have to take their consent properly.
Yeah, would like to add here as well that if you are, sending through the WhatsApp and the message has been delivered, so it will also be considered as a fair delivery of such loan agreement. So it is fine. There are numerous companies who are, helping the NBFCs, third-party vendors who just have this kind of services. So you can avail also in case of physical, if you are sanctioning the loan.
And there is, Mr. Bala, another question that if NBFC has no customer interface, then the need to follow this fair practice code or not?
Not required, ma'am. They have specifically carved out that, if you don't have a customer interface, then, you don't require to follow this.
Yeah, because this is basically for the protection of the customer and the customer interface. If the NBFC does not have the customer interface, it is not required. But the moment they have the customer interface, even whatever minimum amount also it will apply.
Yeah. So, summarizingly, what the RIA has said from the beginning, just summarizing you all, that basically fair practice code, which is a very important element, is a vernacular things. RBI in every inspection generally asks that what are the things that you are giving to the customer vernacularly. Basically, they just want key customers should understand the loan terms. So whether it is in an application form, whether you are doing a loan agreement, they are very particular about this. So all the NBFCs should focus on these things that generally the emphasization area of the RBI is on a vernacular things. So again, it is one of the important thing which comes into the picture, which is KFS. So it is also, that generally NBFC, what they used to be that they are keeping the interest rate low and the making the charges higher. So ultimately, the exact cost of lending is not disclosed to the customers. So now they have, basically eliminated that risk from the customer point of view, and the KFS concept has come, which basically includes entire cost of lending to them, and they have given a chance to the customer to accept it, and thereafter the NBFC will be able to move forward. So thanks, Ria. You can go ahead, and you are doing
One
fantastic
question
presentation. Yeah, correct.
as regards vernacular. So you basically the document get prepared in English, then you may be getting translated in different languages, such, right?
Absolutely. If you are doing a business in a different state, like if you are doing in a Punjab, if you are doing in Rajasthan, so it should be in a Hindi as well, and the English you can keep as a standard at all states, but the in the other language which is prevalent in that state you can keep it.
So is there any requirement that you use this kind of translator or kind of thing, or you can get it translated and use it, or any specific requirement or kind of expectation from RBI that you should use certified translator or any kind of thing is there, or even a technical term you wherever possible you can use English, or that kind of rigidness is there, or what is your experience?
No, so the experience is very, very clear that the vernacular should be prevailed at all times. At all times, it should not be certified translator. You can keep it from third party. You can keep if you can do within your team through internal sources, then of course you can. It is not required. But yeah, vernacular is a very prime thing which generally is emphasized at all times.
Okay, got it. The purpose should be served.
Yeah, correct.
Hemant, one thing comes to my mind when you are saying in translations. If there is a error is taking place in the translation, the things read differently in the vernacular language, in the English language. Tomorrow, when the dispute comes, what will actually prevail, whether the English one or it is the vernacular one?
Yeah,
Because
generally, of
why I am
course.
asking this question is I worked in some of the
Hmm.
overseas companies where the companies filing of the registry, what you call register of companies, the document is required to be filed in that state language which is there. That means in case of the Equatorial Guinea, it was in Spanish. In a DRC, it was actually in French, like that. So we also get it translated from the professional translator. But
Hmm.
still the regulator wanted to put an undertaking given here. This translated version has been actually read and it is certified to be true. What is the original version written in English? It is duly signed by the company official that will be delivered. That is what they take actually. So I'm just asking here if something goes wrong, whether English, because the company is established somewhere, as you say, having a headquarters somewhere in North or even saying the English they are prepared. As and when they start doing a business in different places, they start translating it and putting it in the vernacular language. But what customer receives is the vernacular language.
Correct.
So what happens
So
actually in that
yeah,
situation?
so I would tell you here the two to three things here. So first of all, it is basically a compliance professional responsibility to, clearly verify the things that vernacular is exact copy of your standard English document. Because what happens that if you can say in the last that ultimately the English version is final, but ultimately this will lead to the many disputes in a later, because the customer has taken the decision on the basis of that vernacular document. So ultimately it will be prevailed, of course. So this is a NBFC responsibility to, entire terms and condition which you are putting into vernacular, because in nowadays it is very easy to, make it different because use of AI or,
Yeah.
so I think there is no such scope where the compliance professional cannot check these things. So it is a onus of the NBFCs, because to avoid any kind of dispute in the future, which may arise, of course, and also can attract the penalties, because it is the document on that basis the customer has taken loan.
Yeah.
Vernacular is basically a powerful thing which you have to verify with diligently actually.
Oh, thank you.
Okay.
Yeah, yeah.
One more thing comes into my mind in that case. If the loan agreement is actually given, as somebody said, if you send it to WhatsApp, that is actually a delivery, which is actually there. But is it not the question of the delivery? Do we have to take the acknowledgement from the customer? Yeah. And second thing is, do we also have to take the consent saying that, he has gone through, he has accepted, he has agreed, the consented? Because, so many things which are going to be acted upon by the NPC based on the agreement which is entered. So basically, there should be a concern from the other party saying, what do you think?
So what happens that, whenever the basically customer is signing the document, so it is already acknowledging. And when it comes to delivery of the loan agreement, because, RBI has not given or specified any kind of mode of communication. So generally, it is a prevailing market practice nowadays that, third parties are coming to digitize everything, which is a very easy mode and giving, when it comes to costing things. So this is a evolution of such things where, NBFC responsibility is to deliver. And if there is a, generally the message is delivered, it is considered as a valid delivery. Right, and the onus of or responsibility is completed on behalf of NBFC, because the customer in the loan application form has given his registered number. So
Okay.
on that number, the NBFC, uh, you know, NBFC diligently delivered that particular thing. So it is very well complied, and of course the delivery proofs are, generally saved and recorded by that third party. So this is now a evaluation practice that I'm telling you in the NBFC space or banking space.
Okay, thank you.
Okay, thank you. Go ahead, Ria. Go ahead, Ria.
Further, the NBFCs are not only required to provide the key fact statements to the borrowers, they are also required to, explain the contents of the key fact statements to the borrowers. Further, the borrowers are also required to give an acknowledgement that they have understood all the key fact statements and the contents of the key fact statements explained by the NBFCs and the staff providing those loans. So basically, we can say that key fact statements are the summarized form in which covering all the critical aspects of the loan agreements, because loan agreements and those annexures can be very lengthy documents. So to summarize those in a short key fact statements are given. In the last year, in April 15, 2024, there was one circular regarding key fact statements that is required to be given by the NBFCs, and those are required to comply with the instructions of these circulars also, which says that key fact statements are to be given in the language that the borrower understands. Further, the key fact statements are should have a unique proposal number when those key fact statements are given to the borrower, so that the borrower basically to track the loans given to the borrowers. So once the key fact statements are provided to the prospect borrowers, they are they are required to give a consent or the acceptance to those they are required to give the consent whether they are accepting the loans or not within 3 days, in case the tenure of those loans is more than 7 days or more. But in case the loans are for less than 7 days, then the key fact statements are valid for 1 day, 1 working day. Then also key fact statements. In the key fact statements, all the charges, fees that the NBFCs are going to going to be levy on the loans that they are providing should contain all the charges. And in case those charges, any of the charges or the fees are not mentioned in the key fact statements, then NBFCs cannot levy those extra fees or charges during the tenure of the agreements or the loans. However, they can levy those additional charges which are not given in the key fact statements with the prior approval of the borrowers. Annual percentage rates are the basically the rates which gives the total cost or the true cost that the loans annual percentage rates are the gives the contains the true cost that the borrower will be are required to that the borrower
So I'll just say APR, how APR is calculated. So APR is nothing but true annual cost of the borrowing. So that is how it is known as. It is like including not just interest rate that you are going to charge, but also other fees and other charges. So the customer gets a complete picture about the thing. So to simplify, what typically goes into APR is the nominal interest rate, then the fees, then the loan term, and the loan amount, everything, what are the charges, everything is covered under the APR. So how do I explain? I'll give you an example. Suppose you are borrowing 1 lakh rupees, at a nominal or say at an interest rate of 10%. I'm just giving a very simple example for 1 year. Okay, and you are charging fees of say 2,000 rupees. So interest would be 10% would be 10,000, and fees is 12,000. So total cost is 12,000. Fees is 2,000. So total cost is 12,000. So even though the nominal rate is 10%, but the APR here would be 12%. So that is what APR is in short.
Yeah, what you're saying, in fact, the earlier the people used to charge, what you call lesser interest rate, and other charges they used to charge more, which is never known to the customer at all.
Perfect, sir.
As it comes as a surprise. So that was the thing. Now RBI trying to block that, and they say you disclose everything, whatever it is, and tell ultimately what is the percentage, including interest, other charges, whatever name you call it, so that customer understand and he take the informed decision. That is the whole idea. Yeah,
Correct.
Understood.
Yeah.
Understood.
Sir, I remember one funny incident. We had this inspection which was there, and the SSM was very, become very friendly with us. So he was just sharing, what other companies and all others do. So he said that, I have seen whenever I go for inspection in agreement, generally companies write, that the borrower will comply with all the future requirements, of the imposed by lender. Everything, so they try to cover everything in the agreement. So he was saying that, कल उठ के अगर आप बोलोगे कि नहीं ये इधर आना है, तो you'll have to come only through airplane and all, whether they have to comply. So he was just giving hypothetical examples. So he was saying that, you cannot put such kind of clauses in the agreement which is very open. So RBI is thinking in that fashion. RBI is not only talking about percentage or rate, it is trying to be so fair with the customer that you cannot have any kind of clauses which is very open, very vague in the agreement. If you have that kind of agreement, and if you are trying to put things under the carpet and using that kind of clauses, then NBFCs are going to have a lot of things to be heard from RBI.
Absolutely. Adding to one more thing, that in fact the KFS circular has also mentioned about you cannot change the terms of loan without the explicit consent of the borrower.
Right.
That means that whatever the charge is, now you are disclosing in the KFS, like in fact whatever the third party charges as well, legal valuation, so you cannot change. So very well added by Heyman that NBFC generally keep very vague clauses in the agreement that so these are basically very material guideline which is now prevalent, and of course very best fashion of the customer. So of course this is very material and significant change.
Hemant and Jay, in fact, I remember some joke has come some days back on this related to that. Somebody goes and buying something. He says how much it is. He says it's costing 20 rupees. Yesterday I bought it was only 2 rupees. Why it is 20 rupees today? He says no. There are breakup is there today actually. In fact, there are 2% is the charges and 6% the tariff is added now. Another 6 is, so he gives the breakup. Then he tenders 20 rupees. That fellow gives him back 2 rupees back. He says, why you are having a 2 rupees back to me? He says, the material is not available. I am giving the cost of the material, go home. So it is something like that in NPSC. Earlier, what we used to know, without knowing it, we were being unnecessarily harassed for the additional charges, etc. and all this thing. So customer, in fact, there were a lot of cases where the people have committed suicide because they are unable to pay the loan, etc. and other thing and all. Such incidents also happen actually. There are harassment, there are people, all those things. So probably RBI trying to come to their level best. Now we'll have to watch and see how it goes.
Yeah. Just for benefit of participant, the full form you have said includes all charges levied by REs. What is REs full form?
Annual percentage rate.
REs is regulated entities.
Regulated.
Yes. Okay. RE you are asking. Okay.
Yeah. Okay. And you have mentioned KFS at the format given by Annexure A.
So in the meantime, I'll share one more funny incident, which RBI inspector only told me when he had come for inspection. So how RBI gets complained, so and customers also, I don't know, but customers, if they want to play, they do all these things also. So one of the customer in the sanction letter, he had written, the NBFC had written that the rate of interest is say 10%, and sofa charges nil. And then the customer said, they are writing sofa charges also in the this thing. I did not sit in sofa. That's the reason I was saved. But if I would have sat in sofa, it would be a problem. This is how NBFCs are. And then RBI to write to that NBFC, what is sofa charges? and they said, it was a typo mistake. It was SOA charges, which is statement of account charges. So they had to clarify that, and because of some typographical error also can create a lot of issues. So that is how it becomes funny.
This is because of that auto spell check. Because the
Yeah.
auto spell check, it all happens like that.
Yes. So this screen, responsible lending, is responsible lending conduct release of movable immobile property documents on repayment settlement of personal loans. So this is a recent circular which Jai spoke recently while introducing. So release of property document. Earlier what used to happen, customer used to pay entire loan, but the property documents were not released. Property documents were not found as well, or also in the especially in banks and NBFCs having a lot of branches. So to avoid this, RBI had come out with a very clear guidelines that if it is if the loan is paid, you have to give an NOC. You have to ensure that the customer what we say, the documents are released in timeline, that is 30 days from the closure of the loan. And it says borrowers must be given a choice of collection location from where they want to collect, and loan sanction letters must state the timeline and place of the document return, and NBFCs must have a clear procedure for document return to legal heirs in case of borrower's death. So RBI has made it everything clear. Otherwise, what would have happened is if someone has taken a loan and the person dies, the legal heir may not know where should I approach, so everything should be very clearly in your agreement and everything. So that is how RBI has made it clear.
Meanwhile,
Heman,
question,
yeah.
there
Yeah,
any
we'll take the question.
clause if both email and contact number is must or anyone is sufficient? Please guide. So is there any clause if both email and contact number is must or anyone is sufficient?
Whose email contact number? I can understand.
Borrower, I think.
Borrower, because they are taking the email address and the mobile. So he is asking whether one is sufficient or both are compulsory. What is the RBI guideline? That's what he is asking.
No. So I think that here I want to add that generally the email ID is basically the optional thing, and the contact details are generally which is mandatory, because all the transaction charges and every kind of things are generally sent to the borrower. So, and for the perspective of the KYC ML guidelines as well, contact details are generally mandatory.
Yeah.
Are there any minimum and maximum ROI that the NBFC can actually charge? I know there is a spread, but is there a regulation to cap it?
So, of course, this is a part of the presentation where we were, just recently stuck, and I was just about to explain that as well. So, generally, RBI does not regulate the interest rates. So, but you have to provide your justification. You cannot decide the interest rates uniformly. You have to give a base. This is a piece of ALCO. Basically, ALCO, it is a function of the ALCO that, generally what it is, your cost of borrowing is say 10. So, you have to add your OPEX, you have to add your credit cost, basically NPA provision, and ultimately you have to add your generally expectation of investors, which is basically a cost to net worth. So ultimately you are arriving your cost, and accordingly you have to decide your risk premium. So this is a very well documented structural and computation, which is a function of ALCO, and how the interest rates are basically determined. So generally RBI, whenever comes up and ask about the justification, you have to provide these kind of computation. So
Yeah.
again, you cannot charge.
Okay.
We have
Next.
to provide the loan. We have to provide the loan agreement, other loan documents in
Information.
the.
Mr. Bala, you can text next. It's
Yeah.
information.
Yeah.
Okay.
So for one of the person has just asked ALCO. ALCO is basically Asset Liability Management Committee, who takes care of, basically your ALM and, interest rates and all the liquidity management things.
Can the loan agreement be one-sided titling? It's because the balance in favor of the lender. Can the lender apply pressure in case of the borrower defaults? Any regulation on the RBI on the aspect?
That is what we are looking into, fair practice code. So we
Fair
cannot
practice.
we cannot have this kind of one-sided agreement. If that NBFC is having one-sided agreement, and so please be ensured that that NBFC is going to be in news very soon.
Yeah.
Somebody is putting a comment actually. AI translation is a risky, it may mislead, as it happened in Mova Maitra case.
AI
Yeah,
also, it's a support function.
it is a support function. I just told you that, for what
Yeah,
you
you
can
mentioned that.
maximum say. Of course, you have to get it certified or get it translated through the certified professional or certified translator. But even if it is your secondary function to check, because that's the only thing that you can do. And of course, it is always better to take a checker maker concepts in all your things. So, of course, it is a prime responsibility to get it translated first from the professional and very well reputed translator, and thereafter, you can secondly check this.
You are very right.
So I
You
just,
are very right actually, because you know what happened in case of the listed companies, the financial statements which are actually published in the vernacular language and as well as the English language, we normally used to get it the professional translator to get it translated. That is what it is to be taken. Necessary care has to be taken actually. Yeah.
sir, I'll tell you. In my lift, there are two boards on in the lift. One says that your responsibility. The lift, there's a Otis lift. So Otis lift is saying your responsibilities are concerned. So that is what they are written. In Hindi, in that it is written. आपकी जवाबदारी आपकी सुरक्षा हमारी चिंता है. So concern they have changed it to चिंता. It should be जिम्मेदारी. But somewhere that AI took it and they said that आपकी सुरक्षा हमारी चिंता है. So that is how it becomes.
Heman, as you rightly say, whether it's the AA or it's the auto spell check and all this thing, there are mistakes is bound to happen. I'll tell you one thing, a small incident which has happened about 30 years back when we were working in the typewriter. We had a stenographer. I used to dictate the report, she used to type. At times, whenever I'm busy and all this thing, I used to tell her, why don't you verify and send it actually, or sign it on my behalf or send the report. One of the days she released the report. Next day I got the call from the chief executive officer. He says, come here, Bala, I want to discuss with you. I asked, what is that? How many side wives you have? I said, what is this you are asking, sir? What this lady has done, stenographer, I returned, we have been experiencing the problem with the side wire. She made it, we have been experiencing problem with the side wife. So this is where the check is actually goes actually. So these are all the problems which come across, as you rightly say, one has to be taking care of professionally doing the job. It's the responsibility of the NPSC to ensure this.
Yeah, next question is, I have a question on writing on wrong interpretation in levying
Levying
penal charges at the time of pre-closure. Give opportunities to raise question to whom I have addressed the complaint on unfair levy of penal charges.
Yeah, I have a question on the
Ah,
writing interpretation leaving penal charges at the time of pre-closure.
I don't know what is the
You
question.
know, I think that if I interpret it correctly, these are the charges. Basically, you are doing a pre-closure. So if you are doing a pre-closure and penal charges has applied, so it means that borrower has defaulted and they are trying to do settlement with the company. So it is totally the onus is on the company to waive such charges, because in the balance sheet these charges are basically recorded on the when you have received. Otherwise, these are not basically accounted. So I think this is a pre-closure and the penal charges waiver is a matter, then that means it is a settlement. So I think that company has a right to do a settlement based on its board approved policy and what the delegation it has done through its board approved
So you are,
policy.
I understood her question. It says, I have a question on wrong interpretation in levying penal charges at the time of pre-closure. So I think she would have or he would have taken a loan and give opportunities to raise question to whom I have to address the complaint on unfair levy of penal charges. So if you feel that there are two ways to look at this question. One is if you were told that the penal you will not be charged when you prepay the loan for pre-closure, you will not be charged anything. Okay, and if that was given and if there is a proof or evidence that you can prove that it was told to me that no pre-closure charges will be there, then and if NBFC is charging some penal charges, you can write to him, write to NBFC. If NBFC is not agreeing to the same, you can write to the IO and to the RBI Ombudsman, and then it can be taken up. So, but if you say that you did not understand, but the agreement very clearly or sanction letter very clearly states that there will be a pre-closure charges. Okay, then you will have to pay. Pre-closure charges are not RBI mandates that there would be a pre-closure charge if it is a housing loan or if it is an individual or MSME loan for by individuals for other than business. So if it is not for other than business, it is for personal use. Okay, then there won't be any pre-closure charges. That is what RBI has mandated.
Okay, thank you. Riya, are you ready? Is there? I think this slide was not there.
Yeah. Last slide we discussed was the key fact statements.
Okay, great.
This is the new
And
slide.
coincidentally, we were talking penal charges only, Hemant.
Yeah.
Yeah. So right slide at the right time. Yeah, Riya.
I apologize for the technical glitch, ma'am. I'll just continue. So the next instructions that are the very important thing covered in the Fair Practice Code is the penal charges. Basically penal charges are the charges which can be levied by the NBFCs when there is a non-compliance on part of the borrowers. For example, they are not able to they did not pay the EMIs on time or on the due dates. Then in such a case, NBFCs can levy penal charges. However, there is a restriction stating that those penal charges should not be in the form of penal interest, which can be capitalized with the normal interest. But there is no restriction in the in the Fair Practice Code for compounding the regular normal interest. So, secondly, the NBFCs cannot charge any additional or the hidden components should not be added in the interest rates. And then NBFCs are also required to have a separate board-approved policies with respect to the penal charges that will be levied on the borrowers during the tenure of the loans. Secondly, penal charges must be reasonable, proportionate to the breach, and they should not levy unnecessary charges. That is not a fair for the breach done by the borrowers. And those penal charges should be should not be discriminatory. It should not there should not be any discrimination between the similar products while charging those penal charges.
Yeah. Thank you, Ria. Just wanted to add here, which is very important, that the penal charges should be applied for the delayed period on the delayed amount only.
Yes.
Again, for the delayed period and the delayed amount. Right, not for the entire outstanding value, which is very important in the ultimate intention of the regulator.
Yeah, Riya. Go.
Correct.
In order to
Please go ahead.
protect the, can I continue?
Yeah, please go
Please
ahead.
go ahead.
In order to protect the interest of the individual borrowers, it is mentioned that penal charges levied on the individual borrowers who are not taking loans for the business purpose should not exceed the quantum of penal charges that is charged to the other non-individual borrowers, ma'am. Then the quantum and the reasons for charging those penal charges must clearly be disclosed in the loan agreements, key fact statements while providing the loans. Also, those penal charges and the interest rate models should be published or available on the website of the company. Further, when the loans are due or the EMIs to be paid on time, then NBFCs are required to send gentle reminders to the borrowers, and those gentle reminders should clearly specify the penal charges that might be levied due to in case of non-compliances. These penal charges, instructions were initially laid in the circular dated August 18, 2023, and later it was, included in the scale-based regulations that were introduced in October 2023. The next topic would be with respect to fair practice code is regarding the disbursement of loan and including any changes in the terms and conditions of the loans agreements. So NBFCs are required to give a prior intimation to the borrowers when there is any change with respect to disbursement schedule, interest rates, service or prepayment charges. Those all the terms should be pre-communicated before there is any change with respect to those terms and conditions. If there is any change in the interest rate, then those changes should be prospective and not the retrospective, and these things should be clearly included or the mentioned in the loan agreements and the key fact statements. If the NBFCs are are going to change or accelerate the loan process, then it should be strictly as per the loan agreements only. Then, in case of release of charges, NBFCs are required to release all the securities that are given at the as a security during the or the sanction at the time of sanction of loan. Then those securities should be released upon repayment of full loan amounts. And if there is any lien on the NBFC, in case NBFCs have any lien on those securities, then those liens should be properly communicated to the borrowers as well. Now, in case
1 minute, there is a question that if can NBFC give some, since this was a change in the term we are talking, can NBFC give some moratorium or extra time to borrower in case of need where fund scarcity situation arises during the course of repayment?
Yeah, so I think NBFC can do so if it is a board approved restructuring policy.
Yeah, go ahead.
So there is some additional provision that they have to do once it is restructured and all, but they'll have to. We can do. There is no harm.
Somebody's asked the question whether the penal charges and the bounce charges are the same.
Yeah,
type of penal charge.
Yeah, and NBFC can collect both of these charges. Penal charges are generally basically it is just basically financial discipline charges. So, and a check dishonor or check bouncing charges are separate generally. So you can collect both.
Okay. Yeah.
So basically, when the borrower repays all the loan amount to the NBFCs, then NBFCs are required to release the securities that is kept by the borrowers while taking those loans from the NBFCs. In order to do so, the properties or the documents that are kept as a security with the NBFCs, they should be released immediately within a period of 30 days of repayment of those loan amounts. Secondly, for the collection of the documents or the properties, movable properties that is kept as a security, then a borrower should get a choice to collect those choice to choose the select the location from where they can collect those property documents or the securities that is kept during the after the full payment of loan amounts.
So it can be the branch where the loan
yes,
or any
yeah,
other.
or the other branch. The release of the property documents or the securities that is kept at the time of taking the loan amount, then those should be clearly mentioned, the timeline and the time frame for release of charges for release of properties should be clearly mentioned in the loan sanction letters. And in case there is in case there is a death of a borrower, and in such a case, then there should be a clear procedure in how the documents will be released to a legal heirs of those borrowers, and it should be published or available on the website as well. Now, in case there is any delay while giving back those charge the documents or the security kept after the repayment of the loans, then on part of NBFCs, then those reasons for the delay should be communicated to the borrowers along with the reasons. Then, secondly, if there is any delay, then in such a case, borrowers are entitled to get a compensated, and the amount of compensation shall be at least 5,000 per day, beyond 30 days of repayment, beyond 30 days of payment.
If that delay is due to NBFC, then that
Yes,
borrower.
yes.
Hemant, I want to ask one small question on this. Because I remember long time back, that means 2 or 3 decades back, when the housing loans were actually handed over by the housing finance companies, they used to give the loan against the properties. They used to collect the title of the property deeds as a registration system. Many times it happened, the registration, getting the document is not possible. So they used to get delay. They used to take the NOC from the company, from the borrower, saying that, he does not have the objection in delivering this document directly to the financial corporation. We will collect it. It used to be given. After 15, 16 years, when the loan is repaid, when the person goes for collecting the document, then they used to say that we have never received the document, you go and collect there. They used to wash away their hands. This has been experienced by many people personally. Now also they are getting the loan. Now how this is handled, whether the loan is dispersed only after getting the documents, or they will collect and they will give, or unless the document is given only. Because I think there are a lot of things has changed. We can get the documents also early. I just want to know what is the procedure today.
The procedure is like documents is a prerequisite, when before sanctioning any loan, and you have time for registering the documents. You can get time for registering the documents and all the titles and all, but it's a prerequisite. If you don't collect the documents and you sanction the loan, that won't be treated good by NBFC, by RBI.
So that means at the time of disbursing the loan, document is necessarily to be deposited with them. That is what you are saying.
Yes, sir.
Okay.
Yeah, go ahead.
Yeah. So, in case the documents that are kept as a security with the NBFCs are lost by the NBFCs during a loan tenure, and then the NBFCs are required to, help or assist the borrowers in getting the duplicate documents of it, and they shall bear the cost of the same as well. And the compensation that is paid due to delay shall be an additional remedy, and it should not be an only that will not be the only remedy available to the borrower. It's an additional remedy that is available. If the NBFCs are providing low personal loans on a floating interest rates, then the NBFCs are required to follow certain instructions. For example, the NBFCs are required to strictly give a communication with respect to the impact that the floating rates will have on the loan amounts. And these communications and everything will be also part of the key fact statements and the loan agreements and the enclosures.
Ria, what I suggest, you just read the things, then these people will add it. So that will be safe, understanding will be there, because you're talking, then that connection is not happening. So read what you is there on the slide only.
Okay. Borrower's option at rate reset. Options to switch to fixed rates loans as per board approved policies include the number of times allowed. Choice to increase EMIs or extend loans tenors or combine both, and the prepay or partially fully at any time subject to RBI enclosure norms. Charges and disclosures. All switching service and administrative charges must be clearly disclosed in the sanction letters and updated at each revision. Safeguards. NBFCs must ensure no negative amortization occur. Quarterly loan settlements, borrowers must receive quarterly statements showing principal and interest repaid, outstanding EMI amounts, annualized interest rates, or APRs. Statements must be clear and easy to understand.
Panelist, any comment on this slide, please?
So, ma'am, reset of, I mean, if you see, these are the broad principles, of RBI. I mean, what RBI is saying, that you have to be very fair, very transparent with the customer. So if you see till now, if someone wants to know the gist, and I believe people attending this webinar would agree that whatever we have heard till now, it is nothing but transparency that we have heard. It is nothing but you have to be very fair when dealing with the borrowers. So that is the gist of FPC. If you understand this, and if you're doing your this thing, means you are complying with RBI policy. It is like, you don't have to read the RBI policy. If you are being very fair with the customer, if you are being very transparent with the customer, if you are not doing any injustice to the customer, means you are following FPC practice. You don't have to read the guidelines at all.
Okay.
Somebody has put up a question: to which RBI forum or ombudsman I have to comply? On the loan application, they have wrote loan is personal and taken declaration at the end of the personal use. Now they are actually asking 4% penal charges for foreclosure, stating that the property mortgage in the same partnership firm. This firm properly mortgage the personal loan. This firm does not have any trading or business activities except the rental income. In spite of end use of the narration given and sanction letter stated loan of the personal, they are actually misinterpreting as the loan is for the business purposes. No option given in this room to interest with can we ask this participation? Can you tell us what is the option available?
Sir, I'll just broadly, because this is a very personal question, but I'll broadly try to answer the query. If the sanction document is very clear that it is it's a personal loan and for personal use, and if NBFC is not adhering to the thing, then there is some wrong thing with what NBFC is doing. Okay, and if the person can go to they can make a complaint to NBFC, they can make a complaint nodal officer at NBFC, even if they are not complying with the if they are not agreeing with the complaint. What happens is, anything that you are rejecting, if there is a complaint which you are rejecting, it has to go to the internal ombudsman process. If there is an internal ombudsman, okay, appointed by the NBFC, internal ombudsman will go through the document. If he is also of the view that what NBFC is doing is correct, and he upholds this thing, so it has to be written in the response that we have gone through the complaint, we have gone to the response, and I upheld the response. Or if internal ombudsman feel that the complaint is genuine, and NBFC should adhere to this, but still NBFC is not adhering to the request, it has to be clearly say that internal ombudsman rejected this, but we are going ahead beyond internal ombudsman, we are doing this. If this NBFC is not doing that, it can go to RBI CMS portal, which is customer complaint management system, available to everyone, every individual. There are list of NBFCs given. They can select the NBFC and they can make a complaint, to which RBI will send an email to the nodal officer, and we'll have to respond properly. And RBI reads all the responses, and RBI, if they feel that this is genuine, properly done, RBI will close the complaint. And if RBI feels that NBFC is not adhering to what is required, RBI may direct that this has to be done, and RBI may also ask the NBFC to pay some penalty or some fine, and also may ask some additional payment to be done to the borrower for his for that harassment that had happened to him. So customers, if customers is genuine, complaint is genuine, RBI will play a very important role. So you can go to RBI CMS portal.
Yeah.
I think Hemant has explained very well explained procedure. But just what I'd like to add some few important point at here. So that if you have any complaint about this, then you have to go to the NBFC first, because if you directly go to the RBI, they will reject it. Because as a compliance professional, we are we generally receive, or we just generally review these complaints, and we are just under a very pressurized situation where CMS complaints have come, and we have to redress it very early as possible. So, if you go directly to the RBI CMS portal, then they will reject it completely. So you have to go through a very well procedures, that you have to go lodge your complaint to the principal nodal officer. There is a very well grievance redressal mechanism which each and every NBFC is required to put in place at their website. And when it comes to internal ombudsman, this is only required for the companies which have a asset size of more than 5,000 crore. If it is not, then you can directly lodge your complaint to the CMS as a part of its escalation. If it
The
is not
gentleman is
lifting your phone. Yeah.
the gentleman is added. Nodal officer is not responding.
No,
Yeah,
that
so
they have replied. All the questions later on, phone is ringing, is answered, that they go to the platform CMS,
Yeah.
Complaint Management Service. Okay,
yes.
that is
So
answered.
this is correct way. I think if the nodal officer is not responding, or you are not getting response
Yeah.
from
That is answered.
the company officials, then this is clear that you have to escalate your complaint to the RBI CMS or CP grams as well.
Yeah.
So it is fine.
Next question is how borrower can get reach of KFS, or borrower has to find this on website of NBFC.
I think that KFS is basically which you will not find in your website. It is basically a statement which provides very specific loan terms for each of the borrower. If you have a loan requirement of 5 lakh, then it will have a terms and condition of for 5 lakh only. So also the KFS is required to be approved or accepted by the borrower. So in any ways they will receive it before disbursement.
Because it is the customer specific. It is not the things which is
Absolutely.
available in the website. Because it is the customer to customer. It is
Your part of your agreement and all that, you have to check in that only. That
Yeah,
terms
it is
you have
the
to read.
Yeah.
Read your agreement first.
yeah. It is the
Because
customer specific document. Yeah.
Yeah, I think we can go to next slide. Ria?
Yeah. General guidelines for NBFCs. Non-interference in borrowers' affairs. NBFCs must not interfere in the borrower's affair beyond the loan terms unless undisclosed information surfaces. Transfer of borrower loan. Upon the request of the loan transfers, NBFCs must respond within 21 days with consent or objection. Transfer must follow transparent lawful contract terms. Fair loan recovery practices. NBFCs must avoid undue harassment during recoveries. For example, no loans at odd hours, no use of force. Staff must be properly trained to treat borrowers courteously. No forced closure of charges on floating rate loans. No prepayment or forced closure charges allowed on floating rate term loans for non-business purposes to individual borrowers with or without co-applicants. Responsibilities of the board of directors. Grievance redressal mechanism. The NBFCs of the board of the NBFCs must establish a grievance redressal mechanism. It should ensure that borrowers' complaints are escalated to at least the next higher level for resolution. Periodic review. The board must ensure regular review of fair practice code compliances and the functioning of grievance redressal mechanisms at all management levels. A consolidated review report must be placed before the board at periodic intervals. RBI Integrated Ombudsman Scheme 2021, NBFCs covered under the RBI Integrated Ombudsman Scheme 2021 must fully comply with the provisions and directions.
So just to add, what Ria said, with respect to fair recovery loan practices, NBFCs must avoid undue harassment during recovery. It was in the previous slide. So no calls at odd hours or no use of force and all. So what happens is many of the NBFCs also outsource this collection activities. Okay, so you should, the NBFC should ensure that the person whom you are hiring are also following the same practice. Otherwise, you will be in a problem. So what generally people do is people have a proper logs, maintain what time they went, whether that person was available, what was done. They ensure that everything is captured properly in their document while visiting these things, because RBI checks all these things when they get a complaint. And second is, training is most important. FPC training, KYC training. RBI keeps on asking, how many trainings did you do in the during the year when they come for inspection. We also get emails in between whether trainings are done properly or not. So you should train new staff. They should know what time should they call. They should not abuse the borrower if they are not paying. Everything has to be taken proper care. I understand frustration. I'll tell you how difficult it is, when you are running a business as an NBFC. You are lending money to someone, okay, with a belief that that person is going to pay back. Okay, so the pressure for the business is to disburse the loan. They have to disburse the loan, so they will disburse the loan. They have done, they met their target. Now it is the duty that the EMI should be collected properly. So collection team also has a target that there should be no delinquency in the loan. There should be no delay in the loan. There should be no default. The collection has to play a role. So collection, if collection rate drops, collection will be a problem. So what happens is collection and the management or the main the head of the MD and all will pressurize that you have to disburse. यहाँ पे वो प्रेशर करेगा, you have to collect properly. So in collection, what may happen is you may lose your control. You may say, you may abuse the borrower. You may threaten the borrower that you have to pay today, or otherwise we will do this, that. If you try to do these things and harass the customers, RBI will not take it in a good way, and you will have a problem. So it's a very difficult task. Jai may also agree that when it comes to collection, we ensure that collection trainings are made in such a way that they speak in a they handle the situation very properly, and they try to convince the person to ensure that he makes the payment in such a way that this is for your benefit only. If you can arrange something, otherwise your property may go, your security may have a problem, you may have a future problem. So they explain in such a way, they try to explain that paying is into their benefit only. So that is how we train the employees.
Actually, somebody has put up a question. In case of the default by the borrower, what are the repercussions the borrower has to face?
So borrower is basically his credit bureau score will get impacted first. That he will have a problem in future to get further loans, as well as the penal charges, as well as breaching of the material terms and whatever the NBFC has specified in their loan agreement, that they will get it. So they have to face such kind of repercussions. सबसे more importantly, which is a credit cost, your credit score. That is basically which is very important in today's world, when a person is basically judged for their financial capabilities. So your CIBIL score get impacted, which is substantial thing, as well as you will not be able to be part of. And in terms of that, if you say in today's world, CIBIL score is very important when it comes to, in fact, in the larger companies, the employer hired on, and the regular CIBIL checks are there by the companies before hiring any employee. So it is very important thing to maintain your credit bureau score. If you are taking a loan, you have to understand things that the repercussions are in today's world is very high. So financial and the credit discipline is very important in today's world.
Somebody has actually put up a question. What are the role of the audit committee or NBFC besides as mentioned in the company side? In fact, to answer this question, there is a master circular has been issued by the RBI in relation to the audit committee for all the NBFC companies. And over and above whatever the Companies Act are there, the master circular requirement in terms of the risk analysis, asset management, liability, etc., and other thing and all has to be seen by the audit committee. I think you have to go through the master circular. It is very clear on that. I think
Yeah.
panelists may add anything on that.
Yeah, one more thing that, सबसे important thing is ECL, expected credit loss. So the ECL model is to be approved by the audit committee, and if any changes, so that is a very important thing, including the appointment of information system auditors. And so although companies that covers each and every auditor when it comes to RBI regulation specific, then ECL piece is very important, as well as appointments and remuneration of the IT auditors. So that is also to be taken care by audit committee as an added terms of reference for NBFCs.
Like, yeah, audit committee is not the topic present. Please select the question which is pertinent to topic. And just one question to panelists, that if a borrower is defaulting, whether they can connect and call the relatives whose number is with the NBFC and they can follow up with them legally.
Yeah, I think in the loan, generally it is a borrower, and companies also make a co-applicant to his relatives based on their income assessments, and as well as they add the guarantor. So generally they have that kind of contact
No, they
details.
are not co-applicant or guarantor. They are just relatives or known people. So
No,
whether
I
No,
they
think
there,
that they are not entitled to connect to
exactly.
the relatives other than borrower.
Dipti, then they cannot do anything because unless until a person who's either given a guarantee or the co-borrower or the surety, only these are the people they
Yeah.
will be able to connect. They will not be able to connect the other people. I don't think that will come under the purview.
Okay. Yeah, Ria, word.
Fair Practice Code Communication Guidelines. NBFCs must formulate a fair practice code based on RBI guidelines with our board approval. The NBFCs should be in the fair practice code should be in a vernacular language or the language understood by the borrower. NBFCs may enhance the scope but must not dilute the intent of the RBI guidelines. The Fair Practice Code must be published on the NBFC's website for public access and stakeholders awareness.
Yeah, so generally the FPC must be published on the NBFC website. This is a RBI regulation, but generally the most of the NBFCs for a better corporate governance, they also affix at their branch offices. So which is also a very enhanced corporate governance, including the HFCs, although are required to publish mandatorily, but NBFCs are not mandatory. But as a part of corporate governance, they do it, and they should do it in at their branch offices. They should affix this fair practice code.
Somebody has put up a question whether ECL there is a accounting standard. That's what they actually put up a
ECL is
question.
basically expected credit loss model, which is basically your NPA provisioning norms.
That is also there, but when you're talking about the accounting standard, I don't think there is any single accounting standard is actually there. But this aspect of, what you call expected credit loss, this is actually there when you are talking about the various accounting standards. I think probably one has to go through the IFSR 9, if I'm not mistaken. That is one
Yeah,
thing. And second
correct.
thing is AS 109. That is also talking about the Indian accounting standards. So there's a various standard which are actually talking in the appropriate places. There is no single standard is available when it comes to the financial presentation. Yeah.
Correct.
Interest rate regulations. Interest rate policies. The NBFC's board must adopt a transparent interest rate models considering cost of funds, margins, risk premiums, the interest risk premiums, the interest rates in rates, risk gradation method and rationale for different rates must be disclosed in the loan applications and clearly mentioned in the sanction letters. Public disclosures, interest rates and risk gradations approach must be available on the NBFC's website or published in the relevant newspapers. Updates must be made promptly when the rates change. Annualized rate. The interest rate must be shown as the annualized rate as the borrower, so borrowers understand the true cost of loan.
Yeah, I think I explained it in the beginning as well that this is a basically interest rate model. How you calculate your interest. This is a justification of keeping the interest rates. So when you again just elaborating in a very summarized way that how your cost of funds are moving, that you are taking from the banks or financial institutions. Again, you are adding to the cost of operations and cost of credit as well as cost of net worth, and accordingly you are arriving at your rate. So it is just a rationale behind deciding the interest rates, which is very important. And this is the interest rate model should be board approved, and of course this is a function of the ALCO. And yeah, and the
If the
risk
guar
gradation approach, yeah, correct. Yeah, Mr.
somebody
Bal.
has somebody has put up a question. If the guarantor is actually into default, NPA at some other lender also after NPSC extend the loan to a borrower, can NPSC ask the borrower to provide another guarantor?
Yeah, basically they can ask, but since their loan is secured and their loan are regular, so I think that they are not required to do so.
Is it mandatory to provide the copy of the loan agreement to the borrower, or KFS along with the repayment schedule is sufficient?
Sir, both of the things are necessary to be provided to the borrower.
There are several cases of online online loan companies, private limited, who have and assess borrowers. Some of the times lending is actually suicide. How these companies are allowed to thrive without
To
RBI
thrive out,
supervision and
RBI is
interference?
Sir, that is why RBI has come up with the
basically
fair
having
practice code guidelines that they do not harass the customers, and make the lending transparent and with the ethical grounds. This is the crux of fair practice code. So if your question is there are several cases of online companies have harassed. So sir, that is the reason that the fair practice code guidelines have come into existence.
yeah.
So
One more thing which I would
even
want
I'm
to add
say,
here.
even I'm saying that all the NBFCs are required to meticulously follow these guidelines. In fact, which very well explained by the Hemant as well, that collection employees of the collection team goes to the borrower to collect the dues. So there is also a guideline when you cannot come. The RBI in fact have specified the timelines that you have to come to the after the 8 a.m. and before the 7 p.m. you have to connect to the customers. And there is a also, if you outsource your collection things, then also you are required to follow the meticulous guideline of outsourcing of financial services, including collection code of conduct, your fair practice code. So these are the things which NBFCs are required to follow meticulously.
One more thing I will want to add here is, with these online companies, first, when customers are taking loans from them, they should ensure that these companies are genuinely NBFCs or not. What happens is, there are many fake companies, which are just money lenders. They
Yeah.
just start all this business, and they are not governed by RBI. I mean, they are governed by RBI, but they are not registered with RBI. So it's like, you should ensure that you are taking loan from a genuine institution, and that's very important. Otherwise, you may get all the things fixed up later on, but you will have to suffer a lot of problems.
Absolutely.
Hemant, just guide them on how they find out that it is a genuine NBFC.
And the list is available on RBI website. Just go to
Yeah,
RBI website.
Correct.
Entire list is
exactly.
available.
So
Then
if
they
you
have
take
to
a
go
look,
through RBI website and check the
Yeah.
registration, because all registered NBFCs are listed on RBI website. So just check that.
Yeah.
Right.
correct.
Yeah, Ria, go ahead.
Complaints on excessive interest, oversight, and oversight on excessive rates, RBI has received complaints about excessive interest rates charged by the NBFCs. Though RBI does not regulate interest rate, excessive rates may be deemed unsustainable and not aligned with the fair financial practices. Board responsibilities. The NBFC's board must establish internal principles and procedures for determining interest rates, processing fees, and other charges. These procedures must align with the transparency requirements under the Fair Practice Code. There is a circular with respect to the Fair Practice Code for lenders charging of interest that also needs to be complied. Repossession of vehicles financed by the NBFCs. Repossession clause in there should be a repossession clause in the agreements. NBFCs must include a legally enforceable repossession clause in the loan agreements. The agreements must clearly outline notice period before repossession, conditions where notice period may be waived, procedure for taking possessions, final repayment opportunities before sale or auction, procedure to return the repossessed asset, process for sale or auction of the repossessed vehicle. Disclosures for borrowers. NBFCs must provide the borrowers with a copy of loan agreements and the enclosures referred to in the agreements. This must be done at the time of cession or disbursement, as it is a key part of the contract.
So there was a question that whether loan agreement is required. This is answered. Yeah.
Yeah. There is a must. That's what the panelists also said.
Yeah.
Gold loan guidelines. Board approved policy. The NBFCs must have board approved policies covering KYC compliances and customer due diligences. Proper assessing of gold jewelries should be done. Verification of ownership is also required to be done. Secure storage with trained staff, periodic review and internal audit. Insurance of pledge securities is required. Transparency auction procedures with no conflict of interest. Auction notice in at least 2 newspapers, one in the vernacular newspaper and one national daily newspaper. NBFCs must not participate in auctions that are conducted by those NBFCs. Use of board approved auctioneers only. Fraud. There should be a fraud prevention systems clearly segregating the duties. Loan agreement disclosures must include the details of the auction procedures. Other instructions: PAN card is mandatory for transactions above 5 lakhs. Standardized documentations across the branches. There should be no misleading advertisement done by the NBFCs. For example, giving loans within 2 to 3 minutes. There is a separate directions on providing the gold loans by the NBFCs that came in dated June 6, 2025. Loan facilities to persons with disabilities. NBFCs must not discriminate against the physically or visually challenged applicants in providing loans or other financial products. All branches must extend necessary assistance to such persons in assessing business facilities. NBFCs must include a training module on the rights of persons with disabilities as per the laws and international conventions in their employee training programs. Grievance from such applicants must be addressed under the existing grievance redressal mechanism.
Somebody has put up a question: if the borrower actually parts away with the vehicle in future, can the RBI repossess the vehicle from a standard loan account of the borrower?
The answer is not legally. No, they cannot do it unless there is a default. They cannot repossess the vehicle arbitrarily. Repossession is typically allowed only under specific conditions. So that's not allowed, sir.
Okay. Yeah. Go ahead, Ria.
In relation to Fair Practice Code, since Internal Ombudsman is part of a Fair Practice Code, we are also covering master directions on Internal Ombudsman issued by the RBI. So, introduction. The internal ombudsman mechanism has been set up with a view to strengthen the internal grievance redress systems and to improve the customers' service standards of the regulated entities. Applicability. So the regulated entities are the banks having 10 or more banking outlets in India, whether they are incorporated in India or not. NBFCs fulfilling the following criteria are also required to follow these directions. For example, deposit taking NBFCs with 10 or more branches, non-deposit taking NBFCs with asset size of at least 5,000 crores and having a customer interface. All non-bank system participants with more than 1 crore prepaid payments instructions outstanding as on 31st March 2023. All credit information companies. Regulated entities must set up its own internal ombudsman framework within 6 months of crossing the threshold. Appointment of internal ombudsman. The certain criteria are to be followed by the NBFCs while regulated entities for appointment of internal ombudsman. The person appointed as a internal ombudsman should not must be retired. Must be retired, and it should not be below the ranks of general manager level and should have an experience of minimum 7 years of working in the area such as banking, non-banking, finance, regulation, supervision, payments and settlement systems, credit information or consumer protection. Person person appointed as an internal ombudsman should not be associated with the regulated entities in past or the present. It should be an independent person basically. The age of the person being appointed as an internal ombudsman should not be of more than 70 years of age. The company may appoint one or more internal ombudsman depending on the volume of complaints received. Appointment of deputy internal ombudsman. Deputy internal ombudsman is the position where to support the internal ombudsman, especially with a large complaint volumes. Person may be serving or retired officer at least with a rank at deputy general manager levels and have an experience of minimum 5 years of governing in areas such as banking, non-banking, finance, regulation, supervisions, payments, and settlement systems, credit information, and consumer protection. The person should not be associated with the company in present or past. The age of the person being appointed as a deputy internal ombudsman should not be of more than 70 years of age. Further, deputy internal ombudsman may temporarily act as an internal ombudsman in absence of the internal ombudsman for up to 15 working days. And in case he's he's going to act as an temporary internal ombudsman beyond 15 working days, then the prior approval of RBI is required.
So if you see, how difficult it is to get an internal ombudsman, you've seen this criteria.
So I think retired RBI people are kind of that you have to pick up. And that is
there is somebody else put up a question. There is not much volume for cases of escalated to internal ombudsman. Can still he provide a dedicated sitting space in NBFC office? Cannot he work from CCO cabin since his visit is occasionally?
So, sir, I'll just give you a practical in such scenario. You can, always have a visiting room specifically booked for him. That if he comes here, he will be sitting in this place, and where office will give all the support that it requires, like giving a laptop, giving internet facility, and everything that is required, including all the information and all. So that should work out in such case. So
Somebody
RBI
has
will not go in that detail, that whether there is an office space allocated to him or not. That is my view.
somebody has asked you, one of you actually, please deliberate a little more on the disability guidelines, which has actually newly come because of the Supreme Court order, recent Supreme Court order. What are the major actionable for NBFC?
Sir, I think what we discussed here is not something relating from the Supreme Court guidelines. Supreme Court has recently come out with guidelines on KYC, which will be covering separately when we discuss on KYC perspective, but
Absolutely.
not here.
That's a separate topic.
Yeah. This is with
Correct.
respect to loan facilities to persons with disability,
we are
which is already there,
Yeah.
since many years.
In fact, I think the fair practice mechanism says there should not be any discriminatory, irrespective of any disability, etc., and other factors. That is the only thing. It should be equal to everybody. That is what I understand.
Correct.
Yeah.
So
Yeah,
here, I think
the
RBI
Hemant was
emphasization
telling
is on
that
the
only,
training.
and that we have covered.
Yeah. Dipti ma'am, please continue.
Yes, Dipti, you are
Also,
saying
the
something.
Yeah, the Hemant was telling that only, that disability and that certain portion we have already covered in this slide
Yeah.
on the early.
Correct.
Okay. Yeah. Go ahead, Ria.
Tenure of appointment, the internal ombudsman or the deputy internal ombudsman may be appointed on shall be appointed on contractual basis with a fixed tenure of 3 to 5 years, and if they are not eligible to be reappointed or extend the tenure of the internal ombudsman or deputy internal ombudsman. The internal ombudsman and the deputy internal ombudsman may be removed from its office with the prior approval of RBI. In case there is any vacancy such due to death, resignation, incapacitation, terminal illness, etc., then in such a case, RBI needs to be informed within 10 working days, and such the replacement or the new internal ombudsman or deputy internal ombudsman must be appointed within 3 months of such vacancies. Once the new internal ombudsman or the deputy internal ombudsman is appointed, a report is to be submitted to RBI within 5 working days of such appointment. It is to be ensured that the post of internal ombudsman does not remain vacant at any point of time. Whenever there is a ending of tenure of an internal ombudsman or deputy internal ombudsman, then then the regulated entities are required to fill the position and start the process of appointment of new internal ombudsman prior to that, at least 1 month prior to the tenure ending of existing internal ombudsman.
Panelist, just for clarification, that earlier slide it was mentioned that that deputy IO can perform the duty for up to 15 working days, right? So if DIO can do, and they can perform the position of IO when IO is not there. So that means IO can take leave only of maximum 15 days. That can be the same. Because IO will not be there during that period. Suppose it is going out of country. So DIO will perform the duty of IO, right? In his absence.
Absolutely.
So if
Absolutely.
I put legally,
That's what the direction has stated.
then IO cannot take a leave or out of country. See, if he is out of country for more than 15 days, that means he's not performing duty.
See, ma'am, the idea of RBI is that any complaint which comes, it should not. If you are rejecting the complaint, then IO role is important. It should not happen that NBFC is rejecting the complaint without third party review. So that is the view. So if 15 days, this guy is not available, but now generally what happens is, it's a very hard scenario where we find this, because IO can be easily see things through email, or we can have a Zoom call, or we can explain all these things before replying to these people. So generally, when we appoint IO, we always have a condition that if complaint comes, he will be available on this, and he will ask, he will be responding to the complaints within the timelines.
Yeah.
Somebody put up a question. Are NBFC required to keep the daily attendance records for IO to establish leaves and no casual vacancy?
No, not required.
Yeah, please, Mr. Jay.
For the IO thing, I think I am also dependent on the Hemant as well, because we are just hitting the mark of 5,000, and process of appointing one IO, and absolutely you said it's clear how difficult it is to find a person uh, in the same criteria what they have specified. So yeah, we are facing that as well. So I'll connect with you many times,
And
I
again,
think, about this
reappointment is
as
not
well.
allowed.
Yeah.
Complicated.
Just
Huh?
Hemant, I have one question as well, that one IO can do have a 2 or 3 NBFCs altogether.
Yes, he can.
He can, na?
And yeah, not an issue. And
Yeah.
basically, if it is in the same group, then definitely not an issue. Even outside, he can act as an IO for other companies.
Okay.
Yes, Riya, go ahead.
So that means, sorry, 1 minute. So Hemant, you mentioned that about Google and Zoom, and they can attend. So now what we earlier talking, that providing the place specifically and all that, what was the question? And you are answering. It's not necessary that he should be always there. The intentionally, the complaint should be addressed by the IO. That is the main thing.
Yes. And intention is, if IO comes here, he should have it should be established that IO has everything that is required to perform his duty from the company's side.
So it's not necessary. He should always visit, only everyday visit. What is the other question was there? It is that his duty is to attend the complaint.
Yes,
That is the main.
which is rejected by the NBFC, partially or fully.
Rejected by NBFC. Yes.
Yeah.
Priya.
Yeah, go ahead.
Internal Ombudsman will be reporting to the competent authorities of the regulated entities. So, in case of NBFCs, the Internal Ombudsman will be reporting to either Managing Director or the Chief Executive Officers. In case of non-banking system participants, Internal Ombudsman will be reporting to Managing Director or Chief Executive Officer. In case of traded information companies, Internal Ombudsman will be reporting to executive directors, managing directors, or the chief executive officers. In case of banks, the IO will be reporting to executive directors in charge of customer services. So basically, these are the competent authorities to whom the IO will be reporting. Internal audit is required to be conducted for implementations of these internal ombudsman directions on yearly basis. The coverage of these internal audit will be to check the adequacy of the internal infrastructure escalation and the time frames analysis and the awareness. The scope of these internal audits will exclude the assessment of the correctness of decisions taken by the internal ombudsman. Reporting to Reserve Bank of India (RBI), periodic reportings. The reports are to be submitted to RBI on quarterly and yearly basis, and the due date for that is 10 days, 10th day of the next following month. Intimation of appointment of internal ombudsman or deputy internal ombudsman is required to be given to RBI within 5 working days of such appointment. Roles and responsibilities of internal ombudsman. Internal ombudsmen are required to handle complaints already examined but have been partially or wholly rejected by the regulated entities. The following complaints shall not be handled by the Internal Ombudsman: complaints related to corporate funds or misappropriations, except deficiencies in services. Complaints related to internal administration, human resources, or pay or annulment of staff. Complaints pending before courts and tribunals. Internal Ombudsman shall examine the complaints basis the documents available with the regulated entities, and may seek an additional or further information from the complainants. The reasons for the decisions given by the Internal Ombudsman are to be recorded at the time of this final decision. Internal Ombudsman shall also do a root cause analysis of all the complaints on quarterly basis.
This is one of the very
Internal
important thing. This is one of the very important things as a regulatory framework has actually come. The root cause analysis is actually a must here to go into the deeper into the problem. Yeah. Anything you
Internal
want to add?
Ombudsman.
Any panelist, your views? Root cause analysis?
Yeah, root cause analysis. In fact, if you say that those who are operating the Daksh platform, they have recently come up with the guidelines that, every month with the presence of managing director, executive director, the NBFCs are required to hold a meeting on such complaints, their root cause analysis, and ultimate how they will basically mitigate those risks again. So RBI emphasization is very clear on the root cause analysis of customer complaints.
So the idea is, if the why the root cause analysis is required, if the same type of complaints have been repeating. For example, collection customer is saying that we are facing a lot of issues, harassment while collection. If same kind of complaints are coming again and again, and still NBFC is not doing any action. So this plays a
Yeah.
very important role, that this is a root cause. We found that this is very frequent, and we'll have to take action on this, because RBI reviews all these companies very closely. So that really helps us.
What is the date of that circular somebody is asking actually on
Yeah,
RCM?
I think that it's been around 1 month, since 1 or 2 months. Exactly, I'll tell you the date. I don't remember exactly. So that will be separately informed.
Yeah.
Okay. Yeah, go ahead, Riya.
Internal Ombudsman cannot represent regulated entities before a regulatory authorities. Board oversight. The periodic reports shall be submitted to the board of directors or the committees handling the customer. Internal Ombudsman. Internal Ombudsman shall be designated as an ex officio member, or the and shall be the permanent invitees to the committees handling the customer services and the board of directors meetings. Systems shall be put in place to discuss the cases in which the decisions of Internal Ombudsman is rejected by the regulated entities. Procedure for complaint redressal. Customer service committees are required to approve a standard operating procedures for redressing the complaints of the customers. Regulated entities are required to complaint management software to auto-escalate the complaints to Internal Ombudsman within 20 days of receipt of such complaints. The final decision taken by the Internal Ombudsman is required to be communicated to the customers or the borrowers within 30 days of such complaints filed. Further, Internal Ombudsmen are required to to be given the access of the customer systems, and that access will be in the form of read-only access. The decision taken by the Internal Ombudsman shall be binding on the regulated entities unless it's specifically rejected by the regulated entities through the competent authorities. Committees or boards shall review the decisions of the Internal Ombudsman on quarterly basis. In case the internal ombudsman also rejects the complaints after examination, complainants can approach to the RBI ombudsman. The contact details of the internal ombudsman shall not be available in the public domain as they do not directly handle the complaints of the customers. So this is the procedure how the internal ombudsman will handle the complaints of the customers. Firstly, the complaints will be filed with the regulated entities, and if they reject fully or partially, then only those complaints will be escalated to the internal ombudsman, and then internal ombudsman is required to do a proper examination of those complaints that is put forth before him. Then in and later he is required to give a decision by either upholding the decision of the regulated entities or rejecting the decisions of the regulated entities. Once the decision is taken by the internal ombudsman, then it is required to be communicated to the customers complainants, stating whether the internal ombudsman has uphold the decision of the regulated entities or rejected the decision of the regulated entities. And in case the decision of the regulated entities to reject the in case internal ombudsman rejects the decision of the regulated entities, then it will be escalated to the competent authorities, and they may also reject the the regulated entities may reject the decision of the internal ombudsman with the approval of competent authorities. And the communication to the complainants is required to be given within 7 days of the decision of internal ombudsman. And further, the complainants may file an appeal to the RBI internal ombudsman basis the decision of the internal ombudsman, and the same will be part of the appeal given to the RBI ombudsman. Thank you, and I'll just need to say that I'm really sorry because of my personal, public fear, and that I could not present the way it should be presented. But thank you for understanding.
Ria, all said and done, you've done a good job. Yes, that too, being a maiden attempt, you've done well. Your preparation has been very good. You covered all the points. Of course, initially there was some hiccup, but you picked up. Definitely, you will do very well. All our best wishes to you. You are done good. There is nothing to feel.
Correct.
Yeah.
Ria, your presentation can be a training material for so many NBFCs, on FPSC. So you have covered entirely everything. So you have, done a very good job. Please don't, get disheartened like this. This really happens. Everyone has a fear, to speak. That's this thing. You should not worry at all. So you have done a very good job. Ignore all the public. You just think what you have done something. You are out of your comfort zone right now. You can go ahead. Your second would be is going to be very good session. So please don't worry.
Basically, what you are doing now, that you are not reading the slide, but you are having so many knowledge and experience you wanted to share, but because of fear you are not able to share. That's why this was happening.
Yes.
Because friends this works, or she knows, so she wanted to speak in her own language, but because of that stage fear she was not able to say. That's why this, otherwise she could have very well done the presentation by reading the slides, because this is prepared by her only. But since she had a lot of ideas and thinking in the mind what she wanted to share, which was not able, that's why this is happening. So it's okay. Yeah, Mr. Jay.
Ria, there are a lot of people who are asked, can you share the presentation with us? Very useful for us. That is the way your appreciation has actually come here. Of course, Dipti has replied that we are going to upload the YouTube channel, which will be available to them. You have done excellently good. There's no problem. In future, we will see better, much better. Don't worry. One day, by looking at this, you will be laughing yourself. Okay.
Yeah, great job, great job. Actually, when I came to know that you are doing your first, that gave me a confidence to come up and take this webinar. So your presence is basically my confidence. So,
Thank you. Thank you.
so it's totally fine. It's fine. I think this
Yeah.
will get
Thank you.
improved
Thank you.
absolutely.
Ria, there is somebody else also put up here very clearly. You have done very nicely. God bless you. Okay.
Thank you.
Don't
Thank you.
worry. Yeah. Yeah. I think in
Yeah,
the course of the thing
anything
only
you
we have
want
taken.
to say? Yeah, panelist, anything you want to say on the topic at the last as your thought or as such, or we can end it. Panelist, or we can end the session.
Yes, sir.
Want to add?
Ma'am, we just covered, the FPC part very broadly but in detail. I think we touched up everything that was required. So, even during our training sessions, we discuss so much in detail when we discuss. But here, if someone wants to look at an FPC, I am very sure, this webinar is going to be the base material for everyone to start with. It's very nicely covered and
Yeah.
very nicely done. So I appreciate Jai Singh also, giving his views, very nice views, and I'm happy to meet him, today.
Thank you, Hemant. Thank you. Thank you for the words. Absolutely. The fair practice code is, of course, an evolving area, which is evolving. And of course, this will evolve more because RBI is focused on improving the governance functions of NBFCs. And they will not stop here and they will come up on many things. The fair practice code is not a simple thing. It will cover a lot of topics, lot of things. And as I said that, they are observing the complaints, top 5 grounds, and, they will come up, uh, they will come up on many things. So it is a evolving area, dynamic area. Compliance professionals are it just a we that will ensure that will let the management know, let the promoters know, let the directors know about the importance, about the changes uh, in the regulatory environment. We are the custodian of such things. We are the custodian who understand the RBI expectations. So, of course, we will be more mature, we will be more better soon. And this is one of the webinar which gives a very wonderful insight to all professionals, all you guys. So I'm sure that I would be able to give some kind of contribution to your knowledge and to your understanding. Thank you so much for hearing us.
So one more last thing to close, ma'am, if you allow. I was just reading one article on a fair practice code, and it gave a very good start. It started that India, we cannot sell anything which is adulterated. Okay, that's a law, but still, we have to make advertisement. This is pure ghee, this is pure gold, this is pure, pure honey. You cannot sell, something which is impure, but still, you have to put that adjective that, this is pure. The moment, we realize that, this is not this, we cannot do things beyond this,
Yeah,
the
Mehta.
moment we realize that, this is not allowed, anything which is unfair is not allowed. I think, RBI will stop giving all these directions, and RBI will rely, what business is conducting. So that is what I want. Thank you.
Yeah, let's hope so. Thank you. Thanks, Hemant. Thanks a lot for your inputs, your time. Thanks, Jai, for your time and inputs. Thanks a lot. It was helpful. Thanks,
Thank
Mr.
you.
Bala. Thanks, Ria. And thanks all the
Thank you.
participants. It's wonderful. See you next week with another topic and part 3 of NBFC compliance. Thank you.
Thank you. Thank you.
Thank you.
Thank both the panelists for your excellent deliberations and sharing your personal views, etc. and other thing and all. It's really, good learning. Thanks a lot.
Thank you, sir.
Thank you. Thank you, Bala sir.
Have a good weekend. Yet we'll meet in the next week again.
Yeah, you too.
Thank you.